Hello, my name's Tony Cardenas, and I'm with the Indy Real Estate Market Weekly Update. Motley Fool just came out with the inventories will probably increase. Housing inventory is still well below the levels needed to meet buyer demand. But we've been talking about this for a long time. I'm sitting here with Kyle Morris with FC Tucker, Justin Griffith with Keller Williams, and Shelly Walters with EXP. And when we're talking about inventory probably will increase, I got to think we got to take the probably out of the equation.
Yes.
What do you think there, Shelly?
We have been saying this for a couple of months, I would say. Inventory is increasing. It's still not where it should be, but if, we wanted to say it's a seller's market still, so probably is kind of a weird word.
Yeah, I think I get this question all the time where somebody will read me a headline, and what really matters is like, how do you quantify what they're actually saying? So we've got it. This one says inventory will probably increase, but we've got another one that says, that inventory is down. Well, like it's both, right? You got to be able to look at the data and extrapolate what it's actually saying. Inventory is down based off of the past 2 years from being an actual even market, but it is increasing from where it has been over the past 2 years.
And in our area,
a stable market. Yeah.
In our area, we are increasing our inventories, but you got to understand this is a Motley Fool, and they're not just talking about Carmel, Indiana, and Indianapolis. It's a national deal. But the bottom line is, there are some areas that aren't getting the increase in inventory like we are. I mean, we're fortunate. We're getting back to a, what do you call it? A normal market?
I would call it more of a stable market. Yeah, normal-ish, because it's supposed to be 6 months of inventory to be, considered like an equal market, so to speak. And we're not there, but, back in March, we were at like half a month's worth of inventory, and we're way past that.
Shelly, you were just reading something, or we were just discussing some information that you had.
So, Black Knight was just talking about some of the information in regards to the inventory in May. I know it's August already, but it was the largest housing inventory increase in the past 5 years. So that started back in May. So we have been seeing this for a few months, but they also state that the for sale inventory is still a 60% deficit. Again, Kyle, what you just said, deficit from what?
Right.
I mean, what's that comparative? What's that timeline we are talking about compared to? I think we just need to worry about what is today. Today we have great inventory in our area. We have prices that are stabilizing. They are not going down. People keep asking, is the prices going down? The prices are not going down. I know you have some stats coming up, Justin, in regards to, most recent sales.
Yep.
I sold listings today, this weekend over list, but saying what's compared to is not anything. I just think we need to think in what's happening today and going in the future, and your real estate agent can help you with this.
Yeah. It's headlines that just grabs attention, and the interesting thing is like they are accurate statements. It's just how do you skew? Like, I don't want to say skew. How do you interpret it based on the broader scope of the market? Because
and the area you live in, and where we're talking about.
Yeah.
And
there's just more to
it. Is like California, they're down, quite a bit from what we are right now. Like even whenever we had the crash in 2007, 2008, our market only went down, maybe 5%. And these other markets,
I don't remember
like
Nevada, Vegas,
were
like
40%. And it's like, those will be the ones that are affected first with all the speculation. Ours is more of a stable market. We're not a destination area. We don't have beaches, our weather's not great 365, but we're here.
Well, and getting back to some, we pull up all these different information from different people and sources. Black Knight said, while the slowdown is, the markets are experiencing the strongest cooling, I should say, in home price growth. Those are the comparatively poor affordability areas with low inventory deficits. So when you're hearing the national news say that we have a cooling in home price growth, that is comparatively poor affordability areas. We are not that. So you've got to really pay attention to where this information is coming from.
And what market you're interested in buying at.
Yep. Well,
or
and
selling.
even then, like when you look at that, it's like, okay, so your 380 house from 2 years ago, it's worth 500 instead of 510. That's
Maybe.
the big disappointment.
Or is it,
what do we, like, that's the cooling off of it. Like,
we still had the 20% 2 years in a year.
Yeah. What are we talking about?
So that 20% is not going to go down in 2 months.
No.
It's not going to go down, probably not going to go down at all ever unless something majorly catastrophic happens.
which is not the same market as '08. It's totally different scenarios. We're talking earlier, like, that we were basically, per definition, we're in a recession. But, typically during a recession, as we were talking about, I'm not a predictor of the future or anything, but rates tend to go down to actually encourage purchasing, right? And so, and that was a totally different situation. It was with mortgage-backed securities. It was with lending practices that had gotten pretty loose. Then you had
ninja loans.
Yeah, exactly. But then you had the Dodd-Frank Act, like all of that stuff's been shored up.
Yeah.
Actually we have probably the most qualified buyers ever when they're getting loans these days, right?
Right, and one of the things they said, and one of the things I was reading, I love this sentence, was recession does not mean or equal housing crisis. And people are correlating a housing crisis happening here because of a recession or what's going on with everything around us. The housing market is not in crisis situation.
But I get it though,
Indianapolis
right?
area.
Because it's economic and people get scared, and so people just, people emotionally react. That's why you just need to be able to talk to your agent or an agent who can kind of help explain it. And it has nothing to do with, we're in a customer service role here. I'm just trying to educate people so they can make the decisions that best fit their situation. If you're concerned about downsizing or something like that, like, I don't care what market trend, like, maybe we shouldn't be doing this right now. I mean, I would have told you that 5 years ago, let alone right now. So
yeah, and it gets back to your agent is your advocate. And you really need to talk to somebody who's in this market every day that's going to help you with the process of what your situation for your family is currently.
Yeah, I think the other one is, we haven't talked about here in a little bit, is new construction. I really think
slowing down a little bit.
It is. And so builders are giving stuff back again, right? And you need
incentives.
Yeah, they are. They are.
What kind of incentives have you actually seen in the last, I don't know, let's talk 30, 60 days maybe.
So I've seen, we talked about this before, we've seen them offering points. I haven't really seen them doing the like, hey, full finished basement for $20K type thing yet, but I have seen under list price on spec homes significantly.
I was going to say, I've had a couple builders where it's getting significant, where everything's marked down right now.
Yep,
all the specs are getting marked down. I also have heard that a couple builders are starting to reduce what they're building for clients that are already approved, ready to go, just because they don't know what the price of materials are going to be. They don't know what the rates are going to be, and they're just afraid to, get too much out there. You're not going to get it back.
Yeah. Well, they also are saying that there are people out there in the middle of the buying process that are having to walk away.
I've seen that.
So, there are some issues happening with current processes of building, and maybe some inventory coming on the market that wasn't really planned upon.
But that circles back to, if you have an agent who's got the resources, we started a build, and I had a client we were freaking out because it was right in March when rates went up like a point, right? And in December they'd been 2.9. We did a 180-day lock. Right. I mean, you have options out there, where you wouldn't have to put yourself in that situation. So
that's for a lot of construction loans back then too. But even over the 180-day lock, sometimes they got to do a one-time extension for another 30 or 60 or 90 days. But those great deals,
it's safer.
Yeah, exactly. But that's for construction. So remember, when you're borrowing money, it's kind of hard to go past 90 days right now.
Yeah.
I mean, let's talk about interest rates for just a minute. They're not bad. I'm looking at the board right now on several companies across the United States, and a lot of banks are at 5.875, 6%. Okay, you got some banks out here right now that you could lock a loan at 4.625, 4.5%. on a 30-day lock on a purchase and get down the road. And
is that a 30-year?
That's a 30-year fixed 780 credit score, 20% down. But if you run over here to the 10-year, I just want to tell you what you could lock a 10-year loan in right now easily. If you have no adjustments and you got the 780 credit score, everything's verified, equity position at 20% down, you're talking easily you could get in at 3.875, no points. I'm talking no points right now. And then you got 15-year fixed, easily could get in at 4%. There's a lot of banks and a lot of brokers out there that are 4.5%, especially the banks, not the brokers. The brokers and the small lenders, these guys are more aggressive because they don't have all the overlays everybody does. But right now, about buying a home, these people have opportunities to get some rates that were better just a while back ago.
10-year loan. I mean,
people do them.
Yeah.
You finance a boat longer than that.
Yeah.
Well, you're right. Some boats,
they're like 20-year notes. Yeah.
2025 on the big ones.
I just found that out. That's why I want to buy a boat.
Well, good luck on that. I've been down that. I've been down that road, and you're going to be paying a lot of gas and a lot of food.
Right. Stands for break out another 1,000.
Right. But anyway, let's move over here to the Indy market, Justin, and let's kind of talk about Let's jump into Broad Ripple. What did you see in Broad Ripple in the last 7 days? Let's talk about the activity.
Yeah, so a couple of these areas are actually on the up and up, and then a couple are on the down. So right now, Ripple, we have 11 new listings this week, 6 of which were pending within 7 days. And we had 5 closings, and every one of those closings was over ask price, every single one of them. Same thing with Meridian Kessler. There was 20 new listings this week. 12 of them are pending. 6 of them closed for over ask price. Again, like it's still happening. You price it right, you have a good product, and it's
a hot area.
Location, it's going to sell.
Well, and we just talk about it's going over list, but it may not just be doing that huge escalation that we're talking about.
Yeah, it's been anywhere from
time.
5 to 15. One of them was 25,000, but I mean, it's
Of course.
it's all relative.
A
to
house was
price.
25,000?
Over.
25,000 orders.
Yeah.
That's not even a lot. That seemed like a 12 by 12 inch by 12 inch little square in the backyard somewhere. 25,000.
And the Meridian Kessler, you're probably right. Yeah. Days on the market, 35 days. So it's
That's
still
Broad
not
Ripple?
terribly long. Like that's average for Meridian Kessler right now. Broad Ripple average days on the market, 44.
Wow. Yeah. That's a good turturnaund.
Well, it's a higher price point too.
Yeah. So
What else you got there, Justin?
Fountain Square had 5 new listings this week. 3 of which are pending and 2 closed. Average days on the market were 14 on those, and the average days on the market for everything else it's for sale.
What's the
right
price
now,
down there in Fletcher?
65. Or in Fountain Square, the
Fountain Square,
average price was 358.
358. That's
So
a nice
up a little
place to
bit
live.
from last week's closings.
Right.
And then last one we have Bates Hendricks had 4 new listings, nothing pended. Average
Really?
price of 307. They had 1 closing for 120, so it was a fixer-upper, needed some work.
Right.
Right now they have 19 active listings with the average of 57 days on the market. So inventory is starting to creep up, like they're saying, but we've been telling you for months.
Yep.
Talk to a professional.
Shelly, let's jump over to Carmel. Let's talk about Carmel properties. What do we got?
So in Carmel, we had 31 that activated in the past 7 days. 13 of those pended. Currently have 127 active in Carmel. So we're down about 20, what we've been saying the past 2, 3, 4 weeks. The price drops in Carmel were 27. So we were, talking about this again with the prices being sold over list. There's still some issues with people hitting the market with incorrect prices. So we're starting to see the price drops happen again. Average days on market in Carmel are now up to 19 for the past 7 days on the pendings. There were 199,000 to 7.9
In Carmel?
in Carmel.
7.
When you said the prices are coming down, that's just they're listing them too high right now. They still think we're in the old market. Is that part of the problem?
It's a little bit of a couple of things, right? So it could be it's case by case specific. First of all,
Of course.
it could be that they tried to push it, right, and or
It didn't
something-
work.
or something to what Shelly was talking about. Something had gotten exorbitantly over list price, and then you used it as a comp somewhat disproportionately, right, and versus the list price on it because you can't guarantee those over list anymore, but. It could go down because somebody has to move, right? Like it's not just pricing for all the time, right? Sometimes it's because
Urgency. We got to get out of here.
It's panic. Sometimes it's lack of education. I mean, with my days on market and Shelly's, yours is a little bit higher over there. But I was looking in the city last night for a client, and it's just really interesting because we're in it enough. The 3 of us, like I can take advantage of this for my buyer because I know people are freaking out at 10 days and I'll throw 20 under list all day long. When if I were to receive that, I'd be like, we're not even at average days on market right now. Why are we doing it? But we're looking at stuff downtown. It's been on the market 7 to 11 days. And I'm like, I bet we can get this for, on the market for 5. I'm like, let's throw 475 at it. We'll probably get it for like 485 because a lot of people aren't educated enough to kind of like the tempo of the market right now and that you wouldn't have to do that. So.
Yeah, and that gets back to, I don't know how many times we say this, but if you have an agent who's in this every single day and who's working this and knows the market, both sides, sellers and buyers, you are going to be represented very well.
You just got the pulse better, right?
Yeah, and this pulse is changing on an hourly basis. Yeah. So if you've got somebody who's selling 2 or 3 or potentially not a listing agent or anything like that, you really need to interview them because I sold a listing a couple of weeks ago in Carmel that should not have escalated the way it did, but I don't think the agent that made that offer was as well versed in the market, and we took it, of course. But the thing is they didn't need to do what they did, but it's just I can't say it enough. Hire somebody who's in this market on a daily basis. Currently, it's more important now than ever.
Yep. It is.
In Westfield, I just want to say we had 43 go active, only 11 of those pended, so down a little bit. But they do have 164 currently active, and average day on the market for Westfield is 21. In Zionsville, 19 hit the market, 10 of those sold, so almost 50%. They do have 59 currently active, and their average days on market is up to 32 for the past 7 days.
Wow.
Which is still not bad.
No,
no,
it's really
Not
not.
bad. You remember back in the day, it was like 180 days.
Yeah,
Like,
yeah.
you know, like
Yeah.
you would have homes listed forever, and it's just
And really remember too that, I mean, not a rule, but you kind of said, well, when you do a price drop, let it have 30 days, and then we'll talk about price drops. You would actually maybe write them into your listing contract, and at 30 days we'd do our first price drop, and then we'd discuss it 2 weeks later. And like you keep saying, Kyle, Justin, you guys talk about this. People are talking about price drops at 7 days because it's like, what's going on?
yeah.
Nothing.
Why is it not
No.
sold?
Yeah.
Because it's okay, right? Like it will sell. It will sell. My average days on market has gone up, and basically everything is 2 weeks or slightly above. And I wouldn't even look at a price drop until I was like 2 weeks in. Easy.
No, and
right?
the other thing with my listings, I'm trying to figure out is, do you guys remember back, it sounds like this was like, 4 years ago, but about 2 months ago when we would say, okay, put the house on the market on Thursday, have offers due by Sunday.
Yeah.
Now I'm trying to figure out if that's something to do. And back and forth, I'm not trying to, make a decision for them if we are going to have offers or not, because I don't know. But I don't know. You do put them on a listing. It's like, should you have a deadline? Should you not have a deadline? That's a whole thing I know a lot of people are talking about, because if you do have a deadline, what if nobody wants to make an offer? So
We generally
I look at that as a positive. Like if I see hey, offers due by Monday and it's Wednesday and it's still listed,
you gotta remember to take
cost
that
your
down.
client some money.
Yeah,
If
easily.
you don't update your listing and that's still on there, then I know that you didn't get what you were expecting, and we're going to probably get a good deal at this
Yeah,
point.
we're going
right,
to throw
right.
you $20K.
Exactly,
Yeah.
Justin.
right,
To me, like
right.
Don't oversell.
What I'll do is, let's feel the tempo of the market, and so usually by Friday night, like if you list on Thursday morning, right? Like we usually go live like around 9:30 on a Thursday. I'll know by Friday by like what kind of showing responses I'm getting. Then I might throw it in there and say, hey, responses are due Sunday. But if I've got like 4 or 5 showings and I don't have at least like some feedback about an offer by like mid Friday, I'm not doing that. I'm just
Right,
not, because it will cost us money. Because I've had it happen here in the past 60 days where, 11 days in, full price offer, here you go, So, but if I literally just would have put that in agent to agent remarks, I would have lost $20,000 for a client. Yep.
I look for that all the time. Yeah.
Yep.
Especially these days.
There's just little bitty nuances that are changing constantly that you really need somebody that's understanding all this.
Well, what do you guys? What do you think the future turnaround time is going to be? You think we're going to be adding like another 10 to 15 days since we're getting ready? We're getting ready to go into the fall. I mean, is it
God
going to?
forbid already.
I mean, we're going to blink our eyes here in the next 45 to 60 days. We're going to be wearing some jackets. The market changes. Kids are back in school. I think the mom and dads need a week for that. They're back out looking at houses.
Yeah.
But it will change a little bit, don't you think?
It will some, but my experience has always been the people who have to buy during those time frames, they have to buy. So the times actually generally, maybe it'll go up a little bit, but not exorbitantly, just because if you're moving in the winter, you gots to move in the winter, and if you're selling in the winter, it's because you gots to sell in the winter, right?
You
So
gots
like,
to.
yeah. So you know what I mean? Like I just think I sold in November like 9 years ago, and I sold it in 4 or 5 days because
Right house, right price,
it's a
right
different,
buyer.
Yeah.
it's a different market, so it's still proportionate, I think.
And if you think about too, like even in Broad Ripple, like we have 22 active listings right now. We had 11 new this week. 6 of those are pending. So we got a net positive of 5 per week. And it's like those
Absolutely.
are still moving. The days on the market are still moving up, but they're still closing. So
For me, so like at Fisher's, right? So we had on the market, we had 33 total go on the market this week, from anywhere from 245 to 874. 21 of them are still active. 12 of them sold. There's 150 active in Fisher's, and the average days on market right now is 17 days. But we have 1.5 months worth of inventory in Fisher's specifically right now, which is, like I said, 3 times higher than what it was like probably 3 months ago. Noblesville, there was 33 that also went on the market. 22 of them are still active. 11 sold, anywhere from 174 to 1.2 million. There's 1 month of inventory in Noblesville, and there's 109 active, and days on market is 15. So I mean, it's Shelly and Justin and I were talking about this. It's also very kind of slow 2 weeks, right? You're dealing with suburbs and you're dealing with schools going back, right? And Justin's a little bit different, just because it's still going back to school, but it's not the suburbs, so it's a little bit different to a certain extent. But this is 100% anticipatory 2 weeks ago that this was going to happen.
Absolutely. Yeah, well, here's something that we haven't talked about and doesn't really relate to real estate, but the Indiana State Fair is on, and
Pickle pizza, I heard, is the thing this year.
Is what?
What is it?
Pickle pizza.
Oh,
I just heard about that.
Yeah, I got
Pickle pizza at the Indiana State Fair.
I heard bad reviews, but
Really?
I still want to go try. I've also heard deep fried brownies, for the record, which sounds amazing.
Deep fried brownies.
I had a deep fried Oreo
Those are my
about
favorites.
a month ago. That was pretty good, but I could have one. That was so rich.
I don't
Feel
think
my
I've ever
blood
done one
sugar.
of anything.
I forgot what day it's like. I forgot what day it's like. Today or tomorrow or something. You get in for $3 and everything's $3.
What?
Something like that.
Today?
I don't know if it's today or tomorrow. Sometime this week.
Let's look it up. Let's go right after this.
Right. No, we
get fat
I want to
on Main
go. I
Street,
haven't been to the state fair in a long time. I really want to go.
Oh, that'd be kind of fun to go out there and do a podcast.
It is.
Except for
Oh,
I'd
and
be
you a
slurping
stuffed
on
animal.
corn
Yeah.
and deep fried brownies and Oreo cookies and pickle
Live
pizza.
from the state fair.
Pickle pizza.
And your market updates.
Miserable.
Well, anyway, let's
Sweating.
get back to the show here. Justin is going to get us into one of the container homes.
Yeah.
And
do
we're
a
going to do a
podcast
show
event.
down there, show some pictures. That's going to be pretty cool. It'll be a little different. And then I'm thinking about going on location to a couple builders. Okay, I got some information out. I'm going to see how that comes back. But I think it'd be kind of cool if we go into a couple new homes just to talk about what's going on and, do the show there and kind of change it up a little bit.
I do
Well, and
think-
also talking to that about what people might want to have come up on the show in the future. Any questions or anything? Which reminds me that we did have a question
Right.
this week of somebody asking.
Yeah, what was that?
So it was basically about, if you're a cash buyer, what kind of
Right here.
incentive do you get, right? Because I'm a cash buyer, so I should maybe get things a little bit better, a little bit cheaper. What other, so I think it was kind of in the vein of, inspections are coming back, but I'm a cash buyer, so what other incentives can I get?
Right. But
So-
the bottom line is, I don't care. I'm going to say this. I don't care if you give me a check cash, because I'm going to the title company anyway, and it's going to be a wire transfer back in my bank account or whoever.
It's always cash at the end.
It's always cash at the end. So the cash doesn't even excite me.
It does.
Yeah.
I don't know. There's this misnomer that cash is king, and I get where it comes from, but it's really
Cash is king if the market goes down and you got it in the bank.
right. And I think it's based around appraisals too. But if you're offering under an appraised value, under list price, like you really don't have that kind of leverage that you think you have. I guess
Yeah.
to your point, like it all clears the bank account the same.
Unless you're waiving like a lot of contingencies. I mean, it's
Well,
if you have a client with a conventional mortgage, you can still word that offer to where it's way better than a cash offer.
Exactly.
Yeah. Well, I do think cash buyers can have leverage if they're buying wholesale, if they're doing door knocking or whatever. But as far as like from my clients, that's why we always talk about having an advocate in your corner. I mean, I can navigate a loan all day. I mean, it's just not that complex if you
No.
actually are experienced and know what you're doing, and you know the hiccups and the speed bumps that are going to happen along the way. It's really a pretty headache-free process. I mean,
well, and I always just say, so you're if I have an offer in front of me, or I can get an offer in front of me with a loan. Let's just say the house is $300,000, and the cash buyer is like, I'm going to give them $280 because I'm cash, and I'm going to be able to all day long get $300,000 with the mortgage and maybe $320,000. Why would the seller go, I will take $20,000 off because that's a cash deal?
Yeah, there's
Nobody's
nothing-
going to
yeah.
drop $20,000 out of their pocket just because it's a cash deal, and I get that as well too. I'm cash. I don't have to pay as much.
Yeah, but you've had a lot of these companies that are all over the TV. We'll give you cash for your home and stuff like that. These people thought those were great offers. What they've probably come to find out is that they definitely lost some money.
yeah, there's
Well,
articles
that's
about it this
just-
week.
Yeah, that's
yeah.
hot news.
Where's that
today.
article at?
The Federal Trade Commission just came out with that they have a $62 million fine against one of the iBuyers, and it just basically came out that they have outright said that if they had worked with a real estate agent, they would have made more money.
More money. They would have gotten more money for their home, more money to put down on the next home, whatever it is. I mean, the bottom line is cash. Yeah, cash buyers, they don't excite me not unless I got a piece of junk and I can't get rid of it. That's
I get
that's
where
it.
it comes
really
from,
quick
but
closing. Like if you're in a specific situation,
selling like
yeah,
7-10 days.
Yeah.
Right.
Other than that,
but those
there's no
are the
burden.
one-offs.
Yeah.
Right.
Yeah.
I get it. It's from television, and it's I think it's just kind of like stuff that's come from the 80s, and cash is king and blah blah blah, and like just technology and financing and everything is just so much easier these days. I just don't think it's accurate.
And you got so many people that are cash buyers now anyways. It's like
Yes.
there's still a lot of used too, so it's how are you going to separate yourself?
Well, what we were also talking about is that this market over the past 2 years brought out a lot of people trying to take advantage of people in all different ways. And so the iBuyer became a really, really big deal. But it just says that the FTC slapped with this company a $62 million fine for misleading customers about the true costs of its home buying business.
Well, all their profits are going right to the FTC.
Well, and it's rolled in there, and there's a lot that goes into that, right? Like, because it was really based off of 2017 to 2019 and marketing and all. There's a whole lot.
Yeah, of
you
course.
want to look into
it's just not one thing, right?
But it's more about like the trend of all these things that that became trendy and revolutionary for like the market.
But
so
what they were
you
doing,
away from representation.
Yes,
exactly.
That's going to end up because I know that if you don't have representation, then you are kind of just like out there.
But here's the bottom
they can
line.
convince you whatever they say because they're going to tell you all pie in the sky stuff,
Right,
and you have nobody helping you or talking to you and helping you understand that.
So the bottom line is, if you're selling your home, get a realtor. If you got to talk to 2 realtors, talk to 2 realtors. If you got to talk to 3, talk to 3. But the bottom line is get a professional realtor in your area that's going to represent you to get the best price for your house. That's why they go get their license. They do all the homework. They do a lot of stuff for you. And that's where the value is of getting a real estate agent rather I was going to say a different word, somebody coming in just paying cash and thinking that you're getting the best deal. And it's very misrepresented in my eyes. But anyway.
Well, let me ask one more thing, Tony, just to think about it. If that big major company and corporation's coming in and saying, I'm going to make sure that you make good money, why would they do that? They're a business. They're trying to make money. And
Absolutely.
It's the same thing with when you're working with a builder. You have no representation if you work with that other company. It's all one-sided. They are working for themselves.
Well, I do
need
know
an
this.
advocate.
Offer, a company called Offer bought a home from somebody here in Carmel, and then they turned around and sold the house for another $75,000, $80,000 more.
Well, that's
a
their business model.
Yeah.
Of course. I mean, I can't blame them for making money, but
that
those
original
people
seller
probably
lost $70,000-$80,000
Yeah.
by not using a professional.
always use a real estate agent. That is the whole message behind this. Okay, everybody.
I can
Hey,
think of 3 right here, personally, off the
exactly.
top of my head.
Okay, so if somebody wanted to call you about selling their home or you helping them buy a home, what company do you work for first?
FC Tucker. I have Moore's Property Group underneath FC Tucker. Yep.
Okay.
Our number is 317-649-5122.
Justin Griffith with Keller Williams, Griffith Property Group, 317-507-5599, and website fishers.realestate.
And Shelly Walters with the Shelly Walters Realty Group with EXP. And we have a cell phone direct to me, 317-201-2601. Have a great day and a great week.
Thank you, everybody.